office in Mexico. So this is actually where, let me see here, where CoinMetro was actually born. So the logo there.
Oh, nice.
Wow.
Nice,
Well, that's
nice.
very fitting to follow the DigeconLIVE teaser because Kevin, you're actually Mexican, correct?
Yes,
Sí.
I am Mexican.
Yeah.
See, Kevin. So great. So guys, so welcome to DigeconLIVE. Now we're moving on to the next segment, which is the Breaking Talks. Breaking Talks is when we take something in the news and we gather our community to talk about it, to say what's real, say what's direct. I'm Miss Viva Live. We have Gabriel and we have Kevin Mirko. Kevin, can you just give us a breakdown on what is going on with this sushi fiasco?
Sure. So from a high level, don't put your money in food coins, I guess would be the first thing.
Yeah.
So from the beginning of time, there's been financial fraud. And I think the crypto space has now seen a few cycles of fraud. The big drawing for fraud right now are the so-called DeFi farm tokens or aggregated yield farming. So how does it work? Well, the Sushi Saga rolled out that someone basically created a fork of Uniswap. Essentially, Uniswap's decentralized exchange. It's where most of these DeFi products are now listed. Why? Well, anybody can list them. Anybody can go on and provide liquidity for any token, any ERC20 token. It can be done quite easily, but that also means that anyone can list anything. And because there's no mechanism on the Ethereum blockchain to actually check a ticker symbol, you can create a token with the same letters as any other legitimate token and list it. You can create legitimate tokens, non-legitimate tokens, and everything in between. Someone forked Uniswap, basically made a copy of it, basically, or using the core structure of Uniswap, made a separate ecosystem where tokens could be swapped in and out. And essentially FOMO'd their own token, Sushi, the little Sushi token, until it reached, I don't know what the multiplier was, to be honest, but it was a big one. And once it got to a high, dumped all the tokens they created out of thin air for themselves on all the people that were buying into the FOMO. I think left with about $15 million, something like that, from basically.
Just for anyone who doesn't know what FOMO is,
sure.
What's the FOMO situation? What's FOMO?
Sure. So FOMO is not a crypto term actually, but it's fear. It's fear of missing out.
No,
simply
fear
means
of
that
missing out. Okay.
It's just something's happening and you fear you're going to miss it, so you jump all in. That's basically what FOMO means. So the crypto markets, unfortunately, still at this time, even the big markets generally are moving based on hype and FOMO. So the more FOMO, the more hype a project has, the faster people buy into it, the faster it starts to gain ROI, the faster it starts to increase in value, the faster more people FOMO and more people get into it. And basically, you can have these very quick moves that go from near zero to sometimes tens to hundreds to thousands to dozens of thousands of dollars per token, simply because people feel like they're missing out on the next big thing.
Gotcha.
And they're not moving because there's value there. They're not moving because there's some intrinsic value behind the asset. Simply because people are fearing that they may miss out on gains.
Gotcha. Okay. Great breakdown. Thank you for that, Kevin. So Gabriel, were you involved in this whole fiasco? What is your perspective?
No. Yeah, I'm aligned with what Kevin says. It reminds me also back in the 2017 with the ICO movement, when you saw so many projects raising so much capital in a very short period of time, purely speculation, and at the end, most of these projects didn't make any solution. A lot of people lost their money, and then the bubble crashed, and now we're seeing it again with the DeFi, no? So that gives you for sure a reason that still crypto is quite fragile, and these new decentralized matters of bringing, let's say, traditional financial products to the blockchain or to the Ethereum, right, with the DeFi movement, is still very fragile. And sometimes if they promise you 50% return, maybe still the CFI or the centralized finance is still better in some ways, even if they give you way less return, right? And I think also, I don't know, I think it's also something of generations, younger generations and trying to get very attracted to these type of products, very fast, very instantaneous, quick money, right? And at the end, it seems to be, a little bit disappointed, but again, we're still experimenting in all this. So hopefully from this,
okay.
we will
So let me
with something better. Yeah.
Let me come back a little. We did a comment from the audience that he believes that the sushi sell-off was actually around $4, not around the $11 peak. Now this is the other thing. Did he do anything wrong? I mean, this is decentralized finance after all. Doesn't he have the right to
So
once he created something?
Yeah, good question.
So what is so wrong?
So I can answer that one pretty
Tell us.
forthrightly. So morally or ethically, he did nothing wrong.
Okay.
Look, if you buy an asset or well, you create. In this case, he created the asset.
Yeah.
But everyone knew how many were created. They knew how many the holder was holding, the other developer was holding. Why? Because, well, it's on chain.
Sure.
So anybody that wanted that data could have had that data. Him selling is meaningless. It is absolutely meaningless. But he did create a security. So the Sushi token is a swap. It's a derivative. It is a security. And he created it, actively sold it on a decentralized market without knowing his client and who he was actually dealing with through his pool. And that is illegal. And there's already inquiries from the SEC looking into this Sushi swap fiasco. So from everybody kind of got pissed when the guy supposedly dumped on his investors. I don't see anything. I'm not gonna say I don't see anything wrong with it because you could take it morally, you could take it. I mean, that's out of the question right now. In terms of legality, in terms of could you do this in a regulated market? Yes, of course you could. You would just have to make it transparent. If Elon Musk wants to dump all his Tesla stock, he can do it right now. And then next month or next quarter, when the quarterly report comes out, he's just got to tell everybody that he did it. In crypto, they're doing it before they even do it. So, if you can follow on chain, when it happens. So there's nothing wrong with that at all from a legal perspective. But he was selling a security, and that's where the detail lies. I think decentralized finance is part of the future of finance collectively, 100%. Decentralized finance will be a part of your banking experience. It will be a part of all different types of financial applications you use in your life. It won't be the entirety of the financial market. Centralized finance will always exist, at least while I'm on the planet, and probably why even my daughter.
Oh yeah, well, you're on the planet, okay.
It's not because I'm going to lead it. It's just because the way that the financial ecosystem is set up globally, you're not going to go like this and switch it to decentralized overnight. And if you did, you would cause a massive problem in many markets. The markets can't withstand such a quick switch. And to be honest, there's parts that you just simply can't decentralize. Governance, for example, from a regulatory angle, you can't decentralize. You have to know who you're dealing with, even when it's a decentralized protocol. If you're exchanging money with billions of dollars with someone else,
right.
They cannot be anonymous according to regulation. So there are many pieces that are going to have to be adapted. But the current DeFi movement is a meme. It is a joke. It will never. It's not sustainable. It will never last.
Kevin, we have hundreds and thousands of communities that are hashtag DeFi all day long. DeFi T-shirts. What are you talking about?
Well, they better take a picture of themselves in that T-shirt because they're going to have to burn it within the next or a year. Look, the first question you need to ask as an investor is where the returns come from. And when you look at something like Sushi, now decentralized marketplaces like Uniswap, where you provide liquidity and you get a percentage of the fees that are occurred from people using that liquidity, that money can then be used to farm, to give yield out to people that are staking tokens. That's legitimate on that level.
Yeah, let's dive, Kevin, before we kind of get into this DeFi, not DeFi, and I think maybe Daniel will join us in a little bit for that. Let's just stick a little bit still with the Sushi story, and let's break that down. So why is Uniswap working, and why did Sushi swap fail, even though basically it's the same code, right?
Mm-hmm.
Sure.
Let's
Just want
break
to.
that
I see the same guy who actually asked this question, Gary, who asked the previous question. Just was asked. Here's a follow-up question. I just want to read it real quick for everybody.
Sure.
So he says, illegal in which country, though? What country has jurisdiction over DeFi exchange may not be classified or classed as a security in all countries. In fact, Gary, this question is always asked by people who want to change the system. And look, just because I know how the system works doesn't mean I don't want to change it. But the only country in the world that most people are afraid of when it comes to regulation, because they will go after you ipso facto, meaning that you don't have to be in the country, have a footprint in the country, is the United States. Everybody knows that. In the US, this is definitely a security. In the entirety of Europe, it's a security. In Australia, it's a security. In Brazil, it's a security. In Mexico, it's a security. In the UK, it's a security. In Russia, it's a security. A derivative swap is a security pretty much everywhere in the world. Now, you may find some, I don't know, African country, maybe some country in South America, maybe some country in Southeast Asia, where there isn't a specific law about a swap. But generally, that's a pretty plain vanilla security. So now, who can go after a decentralized? Well, anybody can. The problem is, how do they do it? Well, they can shut down the website. The FBI can take over the website. They can open a new one. They can take that website down. Eventually, they will get to a point where they can maybe not shut it down. It's a protocol. They can cause enough disruption where it's much more difficult for people to get in and gain access, and thus the access falls, thus the FOMO falls, thus the hype falls, thus the big ROI falls, thus everybody stops using it. You can see things like that happening in companies like Shapeshift, for example, when they went from kind of almost fully decentralized into a more centralized manner, and their volumes fell off greatly. You're going to see things like that happen with Uniswap as well. It's almost guaranteed.
Yeah.
And I'm
Right.
not saying I agree to it, but that's
My question, Kevin, to you.
I think that's.
Mm-hmm.
Sorry.
No, go ahead.
I think like what happened with Shapeshift is a completely different situation, though. I mean, they're basically realizing the market reality and changing their functionalities and making, they were. I mean, the maximalists were in a roar when he started adding different coins.
Mm-hmm.
The devil altcoins, right? So, but I think Shapeshift as a company was addressing the market that was available to them and moving with the times, which is a little bit different. But
sure, you're right. It is different.
Chef Nomi,
Mm-hmm.
as he tweeted, I don't. I'll quote here: the fact that I sold some sushi dev share does not make sushi more a scam or less a scam. The fact is on the code. So basically, he said I didn't do anything wrong. But everyone is just so.
My question to you, Kevin and Christy, is that I don't see this risk disappearing in the decentralized space. Let's say happened the DAO. It happened right now with the sushi swap. I mean, it could happen again and again and again, and that will definitely affect this DeFi economy, right? I don't see that disappearing, to be honest. I don't know.
So,
what do you think?
I think, look, markets tend to be shit filters themselves. Like the market itself becomes a shit filter. So the problem is the same thing that happens in crypto. What happened in crypto? Everybody that was in crypto in 2010, 11, 12 calls themselves a trader. They're not traders. They bought something and then sat on it. So now in the beginning, crypto was much more volatile. There was many more scams involved in crypto, lots of illegal activity, buying and selling of drugs, all this good stuff. All happened with crypto, right? Why? Because it was a very immature market. As the market matures, it creates its own shit filter. And eventually, the shit stops flowing. I mean, there's always going to be a certain element of scam, a certain amount. Look, with the dollar, how many scams exist with the dollar? What, 1 billion? I mean, you're not going to stop people from scamming people. Now, his comment saying, I can almost guarantee you, the sushi token was created for one reason, for it to FOMO to a high so he could sell it. Now, that's fraud. So you can, now, that doesn't make, see, the problem is the definition of scam in crypto, in these types of this, especially in decentralized finance. He can't predict if it's going to get more expensive. He couldn't predict how high it was going to go. So all those things are things that aren't really known to him in the beginning. But he didn't create that token to better the ecosystem. He didn't create it to create a business in the last 30 years. He didn't create it. He created a token for one reason, to make himself rich, and he met that goal and he exited. that is fraud.
Yeah.
So
Definitely.
regardless,
I mean, well, this is the thing, Kevin. And I wouldn't call it fraud, but it's a dick move. Oh, I'm sorry. I mean, it's just. I think there was actually this I forget the name, but there was this Russian story about this scammer guy, and then he got arrested, and he got out of jail, and then he just said out loud, guys, I'm gonna do another scam, and you're gonna buy into this, and I'm gonna get rich. He just said it, and so there was nothing illegal about it because he just described his scam. He was very transparent about how he was going to scam his next scam. But I do think, but you know, my big question is like, why did people buy into it then? And then how did people not know that he was doing this for those incentives only, and not for community?
I think most people in DeFi, most know that they're all Ponzi schemes. Or they're not Ponzi schemes. That's a bad way to put it, but they're like a Ponzi scheme. Basically, money flows to the top, and if the people at the top get some money, everybody else gets killed. Most people know it, and they treat it as gambling.
Right.
But that doesn't make it right. And it legally speaking, it's 100% fraud, and I'll tell you why. If you are on Twitter and you're telling people about a project, and you're telling them what you're doing, and you're trying to get people to buy it, and with the express understanding that the only reason you want them to buy it is to push the price higher so you can exit and then leave, that's fraud. And there's a case that can be made there for fraud, 100%.
Yeah.
I mean, without a doubt, it's absolute fraud.
Yeah, exactly. Yeah. My fear is that, you know, with this speculation, a lot of people make money, they are fraud, but then the real applications, the real community that wants to use this DeFi gets discouraged, right? And prefer to go to the CeFi, right? The centralized finance, because you don't have a state regulating, like a referee regulating all these, right? And then too much anarchy. You don't create a market, right? I don't know. You can make a lot of money, but not necessarily changing the model, no? Yeah.
I wouldn't be too worried in the long term, because like I said, every financial innovation starts with fraud. Seriously, credit cards, massive fraud when they come out. Checks, massive check kiting, massive check fraud. When crypto came out, if someone tries to tell you that the first use case of Bitcoin wasn't illegal activity, then they're lying or they're trying to cover something up, because it absolutely was. 90% of original Bitcoins that are still in circulation can be tied back to Silk Road. So it definitely was. It was used for criminal. Now you might not think buying marijuana online should be criminal, and maybe it shouldn't, but it's criminal, right? So, or tax evasion is criminal. You might not like to pay taxes. I know. But if you don't pay your taxes, you're a criminal in the eyes of the law.
Right.
So
true.
DeFi is definitely being used by criminals. There's definitely a lot of guys doing things out there that they absolutely know are scamming people. I don't think there's a lot of people making money. There's a very small amount of people making a lot of money. But the vast majority get screwed, because this type of market is made to screw people. They get in with the FOMO, they don't get out, they get dumped on, game over. Everybody loses except the guy that cashed out, who's probably the guy at the top of the chain. So, but I wouldn't be too discouraged about that, because DeFi has legs. Like I said, what I say is DeFi has legs. Right now they're made of glass, they will break, and DeFi will crumble. But out of those ashes, or out of those shards of glass that are stuck everywhere, will emerge a decentralized finance marketplace that actually makes sense and is sustainable. What is that going to look like? Take any centralized finance product and add in somewhere between 5 and 20% more ROI, because it will be disintermediated, which means all those intermediaries that exist in traditional finance won't exist. They won't be taking their cut. So imagine if going into a CD at your bank, a certificate of deposit, or going into a mutual fund, if it pays 1.6% now, or whatever, 1.1.8, it's going to pay 1.2, 1.6 in the future, because it decentralized finance. But it's not going to pay 14% on the back of a stable coin, when it's impossible to actually scale that. Imagine right now, the amount of people looking for DeFi interest, comparatively speaking to the globe, is this much. That's who's in there. And this is the amount of interest available right now because of margin trading, for the most part. So there's lots of interest in margin trading, comparatively speaking to the guys that are farming yield. Once the guys start to farm more yield, and there's not enough interest being paid here, guess what happens to the yield? It crashes. And that's why you recently saw, I think, was it Coinbase about a month, 2 months ago, maybe 2.5 at this point, where they had a yield product that was paying like 3-5%, something like that on their stable coin, and now it's paying 0.8 or 0.2 or something like that. And that's because they hit that capitulation point where there was more people looking for yield than there was yield.
No, I agree with you. Don't get me wrong.
I guess.
Just to add, I agree with you. Just to add, like, if DeFi continues to grow and mature, my question would be, you will have some centralized company or party controlling that DeFi network, right? Otherwise, too much anarchy will create not necessarily scams, but won't be sustainable, right? Not sure how to explain. I mean, you will need the state down the line putting into this, because otherwise will not make sense.
I think the future of, we already have dematerialized money. We have dematerialized stocks and equities and bonds. Things are dematerialized with the internet. But now we're going digital, which is another step forward. And part of that is going to have to be centralized central bank issued digital currency. Right. That's going to be a major part of it. Why? Now, and that doesn't mean, the good thing is now we should have a choice. You can choose between a CBDC and a decentralized currency or a decentralized stable coin or whatever. You can choose between the two, but the two will exist in tandem, that's for sure. And the vast amount percentages of money are still going to sit with CBDCs for the near future when there's a choice, because no matter how much you can hear people screaming about not trusting government, not trusting this or that, I don't necessarily trust my government. But when I think about, would I rather put my dollars, for example, with Tether, a company I don't know, who's semi-anonymous, who I have no idea if they actually hold the capital and can blow up any day, or at least an entity, the government, that has issued currency for 250 years. And so, there is going to be that, eventually down the road, I envision probably a lot of privately held currencies that are decentralized and centralized, and you'll start to see maybe only 35% in country issued money and 65% somewhere else. But that's going to take time, right? That's not going to happen. But I do think, look, DeFi is part of the future, and it will be part of the future. But we have to get over these bullshit kind of hurdles, which we're currently in now, which is the problem. The positives about DeFi are also the negatives right now. Because anybody can do what they want.
So Kevin, for the CBDC, so for those centralized digital currencies from governments, right? And what would you say to the people who just don't understand the difference? They're just like, okay, well, why? It happens all the time. Like, well, my Amex works. Why do I need your digital coin? Why do I need your decentralized coin? Why? What would you say? Just clearly, just point out the difference.
So, everybody makes the analogy about, I don't know, when there were horses, nobody wanted cars, nobody thought they need cars. Everybody makes all those great analogies. I'm going to not make one of those right now because I'm starting to get pissed off about those analogies. They're just getting old. So the point of the argument is, when you start to use, eventually you will start to use digital assets because they are going to be adopted by countries and by companies and by services you use. The point is that mass adoption happens when you don't even know you're using them. Just like mass adoption with the internet. You can still say that the internet is now, I don't even know if you could define the internet in some countries as mass adopted. Mass adopted is, 90%. And there's still countries of the world where the internet doesn't really exist for 90% of the population, not even close. But if you look at countries like Asia, like most of Asia for the most part, the US to a certain extent, parts of South America to a wider extent, where people now have a phone. They don't have internet in their house, maybe because they can't afford it, or they don't have a computer. But they have a cheap phone that they bought for under $50, $100, and they probably got it for free. And they're able to click a button, and they're on the internet. They don't need to know that they're on the internet. They don't even know how it works. It's there. It works. That is where we're headed. So dematerialization already happened. When they use their Amex card, they're using dematerialized money. Now, if you told somebody, dematerialized money is coming, forget about those dollars in your pocket. Like, no, that's not going to happen.
True.
So that dematerialized money is going to turn into digital, and you'll still have your Amex card. Maybe it's going to now be to your fingerprint or your retina scan, or it's going to be coded into your facial image or something. But that Amex card is still going to exist probably, But when Amex settles the money between where you pay and where you're buying something and when you pay, they're going to settle it in digital currency. And that may not seem like a big deal to a consumer, but that means less cost to Amex, more savings to you, less interest rates to you, and possibly in the future, a way for you to actually make money on the way Amex does its business, because you'll be able to stake your own funds with Amex potentially, and Amex will use those funds to be able to pay out merchants in real time, which will save them even more money, and thus be able to put that money back to you. So it's all about just the evolution of ways to earn money, ways to have passive income. UBI, everybody loves UBI, right? Well, digital assets and the ability to move money instantly across borders gives ability for you to remove cost or reduce cost, but that cost that still exists is a meaningless cost.
Kevin, this is the thing. This is the thing.
True.
Do you think maybe the market is going, just trying to push ahead way too fast? Because, you know, there will be efficiencies with these systems, but if it's so convoluted and people cannot understand, they're losing their keys, they're not understanding what keys are, then what's the point of doing this now? Why now? When the system is not ready for normal humans to understand and to use.
I think it goes back to the same comment, which is why now? Because criminals can make a lot of money right now. That's why, I mean, the idea, DeFi wasn't invented by criminals. Let's put that out there. DeFi was a legitimate thought that came into being for a legitimate reason. But the reason why it's gotten pushed so far now into more adoption is because criminals are stealing people's money. People are committing fraud and pumps and dumps and just taking advantage of the system. And that's why it's the same reason why we know what Bitcoin is, because trust me, if, you know, Don Juan wasn't buying, you know, marijuana from, you know, whoever and selling it to Chris down the street who's 15 online through Silk Road, you wouldn't be transacting in Bitcoin right now because it never would have gotten capitulated to more people. So
true. Go ahead. No, sorry, Kevin.
Just saying that the way it looks now is not necessarily bad for the future. It's not necessarily great, but it's not bad for the future. Everything generally starts out, at least on finance side, in this way.
So you're saying these are natural growing pains to get to the systems, the smooth systems, and the inter-parties, whatever we need for the future.
Yeah, exactly. But funny enough, the other side of the coin is that you see corruption in governments that brings this hunger of creating these new models of DeFi, even Bitcoin. Yeah, I agree that the first years of Bitcoin was quite dark, but I mean there is also a hunger from the masses to invest, to create these systems in order to fight the centralized models, the governments, whatever you want to call it. But on the other hand, funny enough, thanks to the governments, we'll have more implementation into these DeFi projects. Let's say the CBDC is one good example of one government creating a central bank digital currency that will help the transition to more DeFi innovation. On the other hand, no, so it has like the two sides, no, of the coin, I think.
Yeah, look, I think the kind of carryover you can see, like I said, just from how crypto started to DeFi, everything starts out with these growing pains. Unfortunately, the more decentralized you go, the less governance, regulation and law can have. So, I'll give you an example. Even right now, if you're trading, even in the U.S., and you're trading securities, but you're doing them peer to peer with no intermediary, there's no regulation that can touch you. Nothing. The only reason that regulation can possibly touch something like Sushi is because they can bring one that you're selling an unregistered security. Now, if he would have registered Sushi as an exemption or just registered it and then did everything peer-to-peer, he might have been in the clear. He could still get hit with fraud charges. But in terms of things, now somebody mentioned here as well that if it's a derivative, it'd be under the CFTC instead of the SEC. Not necessarily, because the derivative is quite a broad-based term. So if it's a swap derivative, more than likely, and depending on how it's sold, especially in a primary type function, it would fall under the SEC's guise, not the CFTC, or the CPFC, sorry. I'm just seeing some questions, questions pop up. I'm just seeing if there's something here that we should.
Yeah, Kevin, as you review that, review the questions, Yeah, one of the things they're mentioning is that, hashtag DeFi, right? It's not new, and Bitcoin is not new. It's 10 years, right? And so I think Eric Voorhees, the CEO of Shapeshift, he mentioned it as well. You can copy code, you can replicate a system, but it's different when you actually have community and you have purpose and you have value. So there are projects that are valuable. I think one of the biggest things, which is why even DigeconLIVE as a platform exists, is for us to be able to vet and share and promote companies that are doing things right, companies that are doing things with purpose, and they're doing things to protect communities to use these innovative technologies.
Sure, and somebody just made a comment that DeFi isn't new. Mastercoin was online since 2012. So, and that's a correct statement. But there's the recent wave of DeFi protocol says is watered down version with poor governance and master key backdoors. That's from Daniel Truque, I guess, on the comments. Thanks for good question and comments, by the way, Daniel Geary as well. But to Daniel's point, he's correct. Look, the first Bitcoin transaction that made a lot of buzz was this pizza transaction, right? Where some guy paid 10,000 Bitcoin for pizza. That was a decentralized finance transaction. There was no intermediary. Daniel didn't have to send his Bitcoin to Bank of America and have them take a hefty fee and then sit on it for 15 days and then send it back to him, so he had to resend it. None of that happened. So that the term DeFi is probably 2012 roughly, but DeFi started. And then to be honest, DeFi didn't even start with Bitcoin. There were decentralized protocols before Bitcoin. So DeFi itself is not new. But you mentioned he mentions watered down version. And in many instances, the first success that any type of protocol, especially in finance, has is when it gets watered and dumbed down. Why? Because more people can understand it. When it's very new, 2012 Mastercoin, that's like getting on the internet with a broad-based broad or whatever 56 kbs modem in your mom's basement. Many people weren't online. The learning curve was too big. Now the learning curve is still pretty steep for Uniswap. My mom's not going to use Uniswap. If I sat her down and said, "Okay, take out your MetaMask, connect your ledger to your MetaMask. Okay, now what you want to do is get your backup key. Okay, make sure that." I mean, what are you kidding me? Yeah. She would have FOMO'd into Sushi Swap and lost all her money in 3 seconds. I mean, it would have been game over. And so the learning curve is still steep, but it's not as steep as it was. So the fact that it gets watered down, it gets easier, and more people come in. So I think Uniswap came probably at a good time. You were mentioning before, Christiana, like, did it come too soon? We have this. It's like Bitcoin. Yay! It's you either think it's a source of it's a store of value, or you think it's a currency. Those are like the two, or you sit somewhere in the middle, right? But okay, so it's been around like 10K now for whenever. It's never going to go below 10K again until it does. Yesterday, and probably in a few more weeks again. So everybody's kind of getting bored, right? Like, and the problem is we're still a hype and FOMO based market. When people get bored, nothing good is going to happen, because yes, devs are still building and blah, 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 but we need to bring in more eyes. And the way we've been doing that successfully is through FOMO and hype. So while it brings on bad connotation, the ICO bubble brought on but look, I would say ICOs are probably one of the biggest innovations that's hit crypto since the beginning. And the reason is that there's a huge problem with raising funds in the world. It's difficult to raise money. There's no ICOs made it. I agree. And yet a lot of people got in and I'm going to build, all this nonsense.
But just to add to the Kevin, sorry. No, just to add to the Kevin, it's true. But at the end, would you agree that at the end we will need, again, the states in order to put some order, because otherwise it will be the same bubble, crash, pump and dump, or ICO. Yeah, we raised 200 million, but no product, right? So we need at the end someone that says, you know what, let's create a central digital bank currency, and people get much confidence on that.
Whether it's government or whether it's a body that isn't government, it doesn't matter. But good people will do bad things when there aren't rules in place. That's it.
Exactly. Agree.
Human nature.
there definitely has to be intermediaries. There definitely has to be systems to not only protect people, but kind of like NGOs, right? Non-governmental governments, right? But then that's where we I don't want to talk about the complicated governance situations, but I do think that it's important for us to do something. So Kevin, so and what can we do in this industry to bring news and to bring awareness without the scams? So how can we actually bring news that is positive, bring news that brings awareness? What do you guys suggest? Because we like to do action points, in this show. Sure.
So I think we're doing some of that right now. Obviously, I always make the argument that, a lot of people that get listened to in crypto because it's a nascent industry, because it's so new. 10 years, isn't new if you're talking about a pair of shoes. But when you're talking about, something in finance, 10 years is pretty new. I mean, there are banks that still use tape backups, guys, from the 1940s. So, 10 years is a pretty new thing. So the guys that get listened to in this nascent industry tend to be the guys you shouldn't really listen to. And that's because they're the guys that drive the hype in a hype-driven market. So doing things like this where, we talk about things in a more real manner, and people on the show, people that talk about it have a bit of experience in, real world when it comes to finance or when it comes to tech, all that stuff helps. So getting the narrative out there helps. I think that everybody kind of that's involved in this industry, for profit or not for profit, but is involved somehow in the crypto industry. And I was listening to this to the show that was on just before, that was taped just before this one, which was in Spanish, which I can speak. But I heard a few comments about separating crypto and blockchain, and that has merit when you want to sell the technology of blockchain or DLT. It has no merit when you're trying to actually get people to understand because let's be honest. Name me one real use case of DLT that has had the adoption rate that crypto has.
Yeah, no.
None. No. Not even close. I mean, not even within the realm of, nowhere near. So
definitely no.
In most people's minds, crypto is blockchain, blockchain is crypto, because to be fair, blockchain is crypto and crypto is blockchain. At least up to this point.
Yeah.
So,
well,
we
agree.
We need to get.
Yeah.
Well, I mean, this is the thing, guys. Why mass adoption now? You know what I mean? Can't we slowly innovate? And I mean, except for maybe the situations that Gabe was mentioning in South America and in countries that desperately need an option for financing, for decentralized financing, why do we have to mass adopt? Like, why?
Yeah. Well, I mean, obviously it's everybody's goal, and I agree with you. There's definitely use cases. Venezuela, Zimbabwe, whatever, Argentina, hyperinflation.
And even
cap control. It's
exactly.
Mass adoption doesn't mean everybody and everybody's grandma. But what it means is that just you have more eyes on the prize. I'm just anyway. I just reading a few comments because I made a comment when I said crypto. Somebody's talking about 1.3 trillion worth of assets being used by blockchains and 1 billion. Yeah, sure. DLCC, who by the way does settlements in the range of 1.4 quadrillion dollars a year, also uses DLT technology. I'm not saying that that's what I meant by crypto. I should have went broader. I should have said finance. The use case for blockchain up to this point that has really been proven is in finance, the transfer of value. And when we're talking about transfer of value on a blockchain, maybe you don't want to call it crypto, but call it tokenized or call it digital. But it is a tokenized or digital version of whatever the underlying asset is. So I would just blanket that in as a crypto. So sorry for explaining that better. Anyway, so
no, but yeah, true. Yeah. No, just to add what Christy said, what mass adoption? Yeah, I think now we realize after Bitcoin, even 10 years, that this model is still resilient and it's interesting and it works. I mean, I'm completely bullish on this one, but not necessarily all the industries will be disrupted by this type of decentralized tokenized model, right? But especially finance, for sure, as Kevin says. So I think mass adoption is needed because what happens when you have central governments that are more corrupt than everything, right? So you need this type of defense, no, on the DeFi side, no. So I think, yeah, it makes sense to
I think
bring it right
the more adoption, the more legitimate use cases, because the more it's adopted, the more
Also
interesting it
that.
becomes to people who have the thoughts and the ideas and the ability to create interesting and actually specific use cases for different industries. So adoption is important just because it literally drives the train. I mean, it keeps it moving forward. It doesn't necessarily mean that everybody's going to own Bitcoin, because they won't. For all your Bitcoin maximalists, imagine if everybody owned one Satoshi. Yeah, well, they won't. That's just the way things work.
That's the thing. Yes. Thank you, Kevin. Yeah. No, I believe in mass hybrid adoption and an on ramp and an off ramp. You know, so that's one thing. You know, I love the enthusiasm. I love dreamers. Dream away, butterfly. You know, but this is the thing. You know, it's not going to happen in a jolt. You know, you don't shake a baby and make him walk. You know, he has to crawl. You know, he has to, learn his depth perception. Like, the things have to happen in between, and the market's going to ramp on. And it's good to have options, good to diversify your portfolio. But but not just this sudden. That's why a lot of these marketplaces or these experiments with media, when they force people to just use one coin or just transaction in crypto, it gets difficult for people.
Yeah.
Yeah, I agree.
And also, Christy, just to add, I think, for example, when you see people that says let's bank the unbanked people, right? For example, I think there is a lot of distraction right now in the crypto space, DeFi, because it's not perhaps the aim. Let's say DeFi is not aiming to do that right now. No? It's
the majority,
right?
No.
So let's say, in theory, the decentralized models are to help the most needed people, but right now you don't see that, no?
So, and that's a big and well, and
in the
that
future,
just
maybe, no?
Yes, and Gabriel, I think one of the issues with that is that the people who are working in these industries, they're startups, and they have to create revenue, right? And they have to make working businesses with business models. There is a company, the Stellar Foundation. They just recently launched Vibrant, and this is an app specifically for these unbanked groups, or these groups, to be able to store value. So but the foundation is they don't have to make profit. They have to make a use case for their blockchain. It's a foundation, it's a nonprofit. They can do that, but the majority of entrepreneurs and people that have to make products for profit, they can't focus on these kinds of groups, which is unfortunate.
Exactly. That's a good point.
We have a question. We have a question that rolled in. I'll read it to you guys.
Okay.
It says, this is from Gary again. Will we eventually see true DeFi without on-ramps, off-ramps, everything done with crypto and no longer touching fiat? So I guess define fiat, because I would say the answer to that is a yes if CBDCs don't fall into your definition of fiat. If you just simply mean having to move money from your bank account through like a SEPA transfer, or a Swift wire, or your credit card. But will there be true DeFi where you don't touch any type of government issued currency? Sure. Why not? The more mass adoption, I think eventually pretty much every business will tokenize itself one way or another, whether they're tokenizing their equity, whether they're tokenizing a reward system, whether they're tokenizing some other methodology, so that they can bring some new revenue into their business. And basically, you might have, I don't know, you got some Walmart tokens, and then you'll be able to swap those or stake those to get some money back from the Walmart ecosystem, and then use that to, So yes, I think the answer to that is yes, but I think the core of that, most people, regardless of, I might invest in Tesla stock, I might invest in Apple, but I don't withdraw my Apple stock. I withdraw dollars, right? So at the end of the day, I think most people, especially even younger people now, that try to get away from, if you're 20 and you have a job, they're not paying you in sushi tokens. You may love sushi tokens and love DeFi, but you're getting paid in dollars, and that's how you pay your rent. So even people, I think probably the next generation after the current youngest generation we have now, maybe the first generation that by the time they're 20 years old may be able to operate in an ecosystem without touching government issued currency. But for the next 20, 30 years, 20 years probably, I think government issued currency, whether it's digital or not, is still going to be the mainstay for how people exit and get into investment opportunities or other financial markets.
And that's
and
the
actually,
thing.
Christy, you see,
Go ahead.
I
I mean,
don't know,
one
sorry,
thing is
just to add that.
like, sorry.
No,
On that note, is
yeah,
on that note
go
is
ahead.
that what are we going after here? And so for me, my main vision, my main mission for promoting decentralized finance and these is for investing in the future. I'm okay that I can't buy coffee with Bitcoin. I'd rather not. I would rather save it, right? I'm on the hodl gang, and so the thing is, I think while the market is very nascent, then we should simply promote it as this diversifying your portfolio mechanism, storing value, and waiting for the long term, as opposed to needing to buy handbags with Bitcoin. I don't need to do that.
No. But you have now the stable coins, right? That are most of them backed by fiat or other type of assets. But now, answering a little bit of the Gary question when he asked about the DeFi, I think you have the MakerDAO that they create DAI, which is backed pretty much by crypto, by Ethereum, right? A stable coin, decentralized stable coin backed by Ethereum. So now you're starting to see examples not including any fiat money. So why not? Maybe down the line you will see more.
Maybe.
It doesn't mean that they will work.
So I don't know if is Daniel. I think Daniel might have wanted to come into the room because he wanted to answer one of the questions.
Yeah, Daniel, if you don't mind, we'll pop you in.
Hey guys, back.
Hey Daniel.
Yeah, no, what I mean by that, first of all, I totally agree with Kevin on what he meant. Like, first of all, let's define what fiat is. If you have a stable coin on the network, whether it's a bank token or a trust token or a CBDC, that's definitely something that will define whether or not you're truly on a decentralized paradigm. But when we talk about off-ramp and on-ramp, that simply means you're going to have some entity in the network. There's going to custody an asset to freeze it and instantiate it on the network. That means that you are centralizing the custody in one part. Like, if I have a bond in the real world and I want to bring it into a DeFi ecosystem, somebody needs to hold it and promise, I'm not going to sell in the real world while this is instantiated on the network. So no, you cannot have true DeFi unless you have native issuance of assets on blockchains. If you have a CBDC, for example, like the Fed issuing not currency, but actual bonds directly on a blockchain, that would be true DeFi. The problem is that even in that case, let's say that the Fed issues a bond on a Symbian network, and then somebody wants to move it onto a Fabric network or onto Ethereum for some reason. You will need somebody to freeze that asset in that network and promise, okay, like this bond that was natively issued here, it's not going to be sold on the Symbian network because it's now trading in this other network. And until it comes back, we cannot undo this. So you end up with centralization. Anytime you have off and on ramps, that's centralization.
Yeah, so I guess the on and off ramp probably would need to be defined by Gary as well. Just to, I think we assume we know what he means, but as well, the one point Dan made a point that I would add on to as well, when he's talking about how, Jesus, I was literally reading something, lost my train of thought. It'll come back to me in like 20. I'm getting old. Sorry, it's going to come back to me in a second. Let's see. Jesus.
Well,
Dan, why don't you?
Natively. Was it natively issued? Jesus. Anyway, go ahead, guys. Sorry.
Yeah, Dan. What about so you were mentioning earlier about scalability of DeFi. So we're not able to get there yet, but what are the steps you think that we could be taking and to make these systems useful?
I mean, we'd have to define what scalability is, like how big we want these things to become. But in general, if what we mean by scalability is, will this be as big as centralized, like a DeFi, centralized finance, or as off-chain finance? No, it cannot, for a lot of reasons. Number one, governance. You need to have not only a protocol that enables.
Oh no!
Oh, sorry. So you need to have not only a protocol in which you can build in the proper safeguards for the governance, so you don't have this situation like happened with Sushi Swap, but also you need to then leverage the protocol to build in this governance before you launch a DeFi project. Then you're going to run into the issue of regulation. If you have something that is not regulated and starts behaving like institutions that are regulated, the SEC is going to figure out whom to regulate. So whoever has the most centralized position within the DeFi is going to be the one that somehow is going to be held liable, whether that is the developer that made the code available, or whether that is whoever created a UI to access the decentralized contracts. That's going to be the target of the regulators. That is not a position that I necessarily support. It's just regulators regulate, and they're going to find what is the most centralized entity to stop it. Also, even regulation apart, DeFi exchanges they're not easy to use. So they're not for somebody off the street going to say, oh, I'm going to go create an account in a DeFi exchange and start like creating crypto derivatives. It's hard, it's complicated, it's not straightforward. So the ease of use and and even then the customer service in case you screw up or in case the exchange blows up, how do you get your money back? You can't. So something that something that Symbion's CTO mentioned a while ago in one of these like permission versus public blockchains arguments, he said that as transaction complexity increases, people are more willing to delegate the control or the services of something. So when you're talking about something like complex derivatives that may have, some type of like complicated cash flows, and by complicated I mean even something as simple as you need to figure out what is the right price of something's trading so I can get paid based on that, or somebody needs to hold the keys so this is custody, and that kind of stuff. So like people are willing to delegate that. So as DeFi starts being more popular, people are going to start delegating to services that become trustworthy. But services will become trustworthy once they centralize, start providing easy to use user interfaces, and actually start giving like some type of guarantee that if something blows up, they'll make it whole. And the moment somebody starts doing that, then the regulators step in, and the regulators actually then bring in more trust to it, and then those are the platforms that will flourish. So essentially, the moment DeFi is successful, it actually is its own demise, because at that point, centralized versions of what DeFi is doing will take over.
It's an exact mimic of how traditional markets work. I mean, there's many pieces of traditional markets that don't need to be regulated, that end up getting encapsulated in a larger ecosystem that has regulated pieces for the same reason. So that's the whole regulation is built on trust, and the regulators usually get the bad rap, but it's also the legislators. So regulators can't do anything without the law. And the fact is that as soon as the law starts to catch up, then the regulators have more to regulate. And I think as we get more into a decentralized, as decentralization starts to grow, right now, it's not that peer-to-peer isn't regulated. It's that there wasn't yet a need to go down the road. You saw like crowdfunding laws, they're relatively new on the books around the world. It's because this wasn't needed before. It wasn't that people weren't peer-to-peer transacting in 1965. It's just that nobody cared because the volumes were so small. When the volume starts to grow and decentralized gets larger, I guarantee you legislators will try to figure out a way to make those, let's not call them on-ramps or off-ramps, but let's call them pieces of the ecosystem. They'll try to make them gatekeepers, because the whole financial ecosystem works based on a system of gatekeepers. When you come into the financial ecosystem, we know who you are. Then you can go and play, but we know who you are because you came in through a door where someone checked your ID, right? So I think, basing kind of technology is going to keep moving, but legislation will move with, it's going to move slower, that's for sure. But once you hit a point where there's enough interest and enough overall volume, they will get interested at some point. Now, the question is, from a technical angle, how much can they do? And what can they do? And where, you're not going to stop a protocol, but you can hinder it.
Hey guys, I would love to hear your opinion. So we don't have that much time left, just about like 10 minutes. I would love to hear your opinion on, the global pandemic, quantitative easing, money printing, right? How does this affect, we had a plan last year. That plan has changed, right? So how has that affected the industry, and what is your reaction to it as leaders in this business?
Do you want the crypto version or the economist version?
Whatever you feel. whatever hat you want.
Yeah,
Yeah,
the hybrid. Yeah.
The crypto version is that this will actually like bolden people to go into crypto because you cannot trust that the Federal Reserve and other like central governments are gonna keep like printing money and then money is gonna be worthless. As somebody that is based on a dollar, in a dollar-based economy where like I earn and spend in dollars, I really have no motivation to go into crypto. I mean, I go into crypto for a lot of other reasons, but the increased borrowing of the government is not an issue. It happened in 2008 after the crisis. I think like the debt back then increased like a couple $1 trillion. I think this time, since this administration came on, it has increased about 6 trillion. It doesn't matter. It doesn't matter for two reasons. The economy expands and the percentage of the debt as a percent of GDP shrinks. But even that aside, assuming that we don't even grow, the issue is that the US, like it or not, is the nicest house in a shitty neighborhood. The whole world is worse than the US. There will always be demand, at least in the short term, for US debt for two reasons. Number one, a lot of transactions, especially just taking into consideration commodities, are traded in dollars. There's a lot of demand for dollars, and a lot of countries actually fund themselves in dollars because their local currencies would actually result in having to pay higher interest rates. So dollars is the currency in which people trade, and also dollars is just the reserve currency. So a lot of countries also hold reserves in dollars. So the government just like sold I think like $2 or $3 billion worth of bonds to fund this like monetary easing, and that was no issue. They bought it, and they're paying what, like, I mean, less than 2% on a 10-year bond, and investors worldwide are happy to buy it. Where could that become an issue? If suddenly global growth comes to a halt in the US and the rest of the planet is flourishing, then that's when we may start seeing issues related to inflation and lack of trust in the government repaying. But really, like, wages have not increased, so there's no local domestic inflationary pressures. And externally, as I mentioned, there's still demand for the dollar, so there's no inflationary pressures. And actually, this was I think about a month ago, the Fed actually changed its monetary policy, the guidance. I mean, it was something very subtle, but if you read through the lines, it means what? They used to simply say we're going to target inflation at 2%, but what that meant is that they always kept right below it, because when they were getting close to it, they would push up interest rates to bring inflation down. Now they're saying we're going to keep it at 2% on average, which means you can go over 2% for a few quarters, and then they'll bring it down. So now what's going to happen, they're more open to actually let inflation go higher. And the reason they're doing that is because they realize that there are risks. Right now, there are no pressures of inflation, neither domestic nor international.
So I'm usually the guy that has to go through all that nonsense, so I appreciate it. I'm just going to make a few comments on top of what you said. So one, I'd like to quote the lauded economist Mike Tyson and say that everybody has a plan until you get punched in the face. And I think for many countries around the world, COVID was that punch in the face. But COVID is macro. If COVID only happened in the US, then all the guys on Twitter right now calling for hyperinflation and Bitcoin to go to 1 million might have, a 1% of a chance of that actually happening. Maybe less than 1%, closer to 1% than it is right now. So as Dan already mentioned, I won't mention again, but every 10 years, the guys who say that the dollar is no longer going to be the global reserve currency come out of the woodwork. And this was their time to shine. So they've been shining for the past few months. But the USD will remain as a global currency. So I think when it comes to crypto in general, I would say that if you would have asked any crypto maximalist 2 years ago, a year ago, said, look, what if, let me give you a scenario, guys. What if the entire world went on lockdown, economy shrank by 30 or 40%, the U.S. unemployment rate shot up to levels that it hasn't seen since the Great Depression, whatever. You gave out all these different statistics around the world and then asked all the Bitcoin maximalists in the room, and even some guys who don't even own Bitcoin, and said, what do you think Bitcoin would be worth if that happened? And they'd go, 6 figures. Some guy would go 7 figures. Another guy in the back of the room would go 145,465,372.83 cents. And he'd show you a formula for how he got there. And guess what? They're all wrong, because economic theory is economic theory. And we've proven, I think, a lot of those, we're in a situation that the world's never seen, but at the same time, the supposedly shitty mechanisms we have to combat, let's say to keep the economy in balance, well, guess what, guys? They kind of work. But so we've had imbalances, we've had this, we've had that, we have the market going out of whack, we have the Fed throwing all trillions of dollars into the market. As Dan said, look, 8% of U.S. tax goes to pay the interest on the U.S. debt. 8%. And at that, right, even now, that 8% still has a buffer. Even with all the money that's been printed, there's still a buffer. And they can easily put that up to 9%, 10%, 11%, 12%, move money out of other programs. No problem. It's all just numbers on a board, on a ledger somewhere. It can happen pretty easily. So yeah, I don't think much has changed. I think what we're going to see is more about what has changed, and what will change is just us losing a bit of our freedom, which always happens in every crisis. So you might have to wear a mask when you go to Walmart for the next 10 years. And you may get your civil liberties trampled on a bit. But I think the new normal is pretty much going to be the old normal. Just about 1 year. That's it.
Just to add, because we talked a lot about DeFi, I think this pandemic opened more possibilities to these decentralized models, but it's still, as I mentioned before, it's still too new. And at the end, we will need some central corporation or government to help us on that transition, right? Whether we like it or not. But I think this year was a very good opportunity to show these experiments, right? And see where they will go next year. We'll see. Yeah.
Amazing! Wow, thank you guys so much. These are fantastic insights, and you're right. We need these kinds of conversations, and maybe we do need all of our grandmas and aunties and uncles and friends on this industry, but maybe not right now, right? So let's make it safe. Let's spread the good news, right? And let's keep going. If you just wanted to thank all of you, if you guys can just share really quick, where can people find you if they want to hear more about your company, if they want to hear about your follow you on social media. If you guys could just go around and share, that would be great. Starting with Dan.
Sure. You can find more about Symbian at symbian.io. The best way to contact me is through LinkedIn. So just Daniel Truque. I think I'm the only one so far, and if there's somebody else, just know that I'm in New York based and show Symbians. I have a Twitter handle, which is just @Truque. I never use Twitter, but I do use Telegram, and it's the same handle. So either Telegram or LinkedIn.
Great. Awesome.
Great.
Thank you, Dan. Gabriel?
Yeah, you can find me on LinkedIn, Gabriel Sanko. Twitter is Gabo Sanko. And also my website, mobileyourlife.com. We also publish some research paper every month, so you can check it out. And yeah, happy to reach me. Yeah.
And special announcement that Gabriel Sanko is involved with Digicon Español. So stay tuned for more of Gabriel, more in Spanish interviews and content and inviting entrepreneurs. So get excited for that. So Kevin, last but not least.
Felicidades, Gabriel. So yeah, you can find me pretty much everywhere at Kevin Mirko. Nice and easy. I have kevinexplainscrypto.com if you want to get in some of the, if you're just getting into crypto and you want to understand a bit more about it. I do AMAs every week for my company CoinMetro, where I'm CEO. I have the European Crypto Association, where I lobby regulators. So if you have some regulation or other questions pertaining to that, you can hit me up. Mainly on Telegram and Twitter, I would imagine is where I get most of the traffic. Never used Twitter before my crypto days either, but was forced to. So now I'm active on Twitter.
Amazing. Thank you guys, and for myself, ActJust, it's been my Twitter handle for years. And just like the DigeconLIVE mission, we want to bring justice, we want to bring equality and freedoms through these innovative technologies. And so entering the digital economy with a bang, DigeconLIVE. Thanks you guys for this community hour, for coming with us, coming together and talking about these breaking news through Breaking Talks. So really just thank you for your time, and hope you all have a safe and happy evening out there.
Thank you. Thank you, guys.
Ciao, ciao.
Bye.